Hello, thanks very much. Thanks for the introduction, much appreciated. So I'm here to talk a little bit about logistics and the increasing logistics costs, which I think everybody that's in the global business has to cope with right now. And really talk a little bit about how we got here and where we are and what we think will happen, right? And if you look at logistics historically, we were the guys that are always around at trade shows and guys that pay the bills and go out for dinner or lunch. And I think we're fun guys, right? But we're not really in the wine business, right? We're providing services to the wine industry and in general to the industry, and we're always somewhat of an invisible industry because people don't think how does a product get from A to B basically, and how does the product end up in the store and on the shelf, and there are people that are specialized in this. We are one of those companies. Generally we were cheap, right? And most logistics managers always looked at how much more can I reduce my transportation cost year over year essentially. We're also a very predictable industry. We're looking mainly here at sea freight transportation. So what I'm talking to you about today is about sea freight transportation, and you can look at basically what has changed, right? And at the end of the day, I think there was the perception a box is a box, and a box moves from A to B, right? And it's a box, nobody sees ever the box, nobody sees ever the container, and nobody looks at the container. And this has changed a little bit, right? We were like an Uber. You call an Uber, you call your freight forwarder, the container arrives, the container gets there, and it's there. So I want to look a little bit or take you on a journey how we got to the point where we are, because all of a sudden logistics is there basically. So if you look at, and I'm sorry this might be a little bit too small, right? But if you look here, this is essentially looking at all the ocean carriers that are available today, and again, we're only looking at deep sea. Maersk remains the largest carrier, so Danish company essentially that is the largest carrier. If you look at the total capacity, so today in the trade globally, we have 6,700 ships, about 6,200 ships, and about 25 million TEUs moving around globally. So that's everything, any container that is available that is moving around. We have 3 large alliances, and really we only have 6 global carriers that are left. And over the past years, there has been a significant consolidation. If you look at the bulk wine industry, it's really 4 European carriers that are interesting because they are providing services from the historical strong bulk wine origin, so the southern hemisphere, where the Asian carriers are not that strong basically. The Asian carriers, of course, are very strong on the Asian trades, on the exports to Asia, but if you look at the northbound trades, particularly coming into Europe, it's mainly the European carriers. So how did we end up here? And I think one of my esteemed colleagues talked about this before in one of the presentations. The US is part of this. So if you look here, this is global container trade, any commodity. So this is not particularly for the wine. This is really looking at 2019 pre-COVID levels to levels from January to June, first half of 2021. And you can see there are significant moves in terms of the trade today, and I will show you after really how the trade has moved year on year basically, but we are looking at this pre-COVID to now to the development, and you can see that there are significant movements on the trade. Sorry, my eyes are bad, so I have to look at my presentation myself because I don't have all the numbers in my head. The East-West trades are particularly strong, right? And if you look at the Asian inbound trades into North America, with a growth of 23% is significant, and this is all consumer products, right? And this is really where also, and you will see this in a later slide, this is where the money sits at the end of the day. This is where people are really paying high freight rates. At the same time, we also have a strong increase that we are seeing in Europe to the United States. So again, the US driving this, but also Asia to Europe. So here you can see now the trades year over year. So basically comparing January to June 2020 versus 21, which is slightly different. But here the trade overall has even gone up 17.5%. So there's a significant higher movement of goods in the world compared to how this was in the past. And again, here the Asia, North America, and the Asia-Europe trades are really driving this. But you can also see that other trades have significantly increased. Almost all the trades have increased or have been stable. So if you look here, this then looks over the, again, global container trade or global trade or development over the last 18 months. We have the numbers right now here posted until June. We now have the numbers until August. You see a slight decline. But you can see the development basically in 2020, COVID hit. All of a sudden, the trade went down. And essentially, since September 2020, the trade goes up. It reached its peak around May, and it's slightly going down again. If you look at the numbers today in terms of global trade, we believe that it has dropped to about 6% growth, basically, compared to the same period last time. So the curve has kind of taken a little bit of a dive downwards, and there's a little bit of a downward trend, but the global trade in general is still very, very strong. What you can see here, this is from our portal. It's called Sea Explorer, so you can see any vessel movement globally. Basically, it's accessible to all our customers, and you can see the congestion and incidence of all vessels sitting at ports or outside of ports. This is a live shot from October 29th, and you can see here that already 12% of the global container fleet is essentially either idle or sitting at ports. We actually looked at this yesterday. This has increased to 15%. So these are containers that are sitting on vessels at ports and vessels sitting outside of ports that cannot be discharged. We provide a live look to this with an ETA, and this has essentially completely dislodged the entire supply chain and the reliability of the supply chain because there's not enough vessels out there to cope with this. There's not enough containers out there to cope with this, and the infrastructure is really not there. So the biggest problem in terms of this situation is that the infrastructure on land is not there, but you also don't have the capacity in a lot of terminals. I mean, even if you look here at the port of Rotterdam and the port of Antwerp in Europe, they are struggling, basically. You look at the UK, they are struggling. All the major US ports, they are struggling, and the infrastructure is simply not there, and the containers are sitting sometimes for months before they are moved. This is a look at the carrier schedule reliability. So this is essentially for the planning purposes of your supply chain measured on a monthly basis by Sea Intelligence. It's a portal we are using, one of the most experienced analysts in our industry. The report portrays the schedule reliability globally on all vessels and also the delays on all vessels. And if you look here in August, the schedule reliability was at an all-time low at 33%. Yeah, so only 1/3 of all vessels basically called at the time that they were projected to have called any ports, and the average delay of vessels right now sits at about 8 days, which you can see on the next chart on the right side, essentially. And this, of course, is a massive problem for the trade because you can't plan anymore, and the planning completely goes out the window, and you have to increase lead times and look at this from a longer period of time. Here again, you look at the various carriers. So this is a look at the carriers, and you can see that the two top carriers, which is Maersk and Hamburg Süd, they belong to the same company. They have a reliability of around 45.6%, with Hamburg Süd at 38%. And you look at the bottom, this is Evergreen. This is an all-time low, 11.5%. So this means that basically 9 out of 10 vessels did not call the ports when they were scheduled to call these ports. And this is causing huge disruption on the overall planning for all our customers. So here, this is a look at, because people are telling us all the time, right? When ships fall behind their schedule due to longer waits in ports, carriers have the option to add recovery vessels to take their place and keep a weekly service going and maintaining the weekly schedule, yeah? The number of ships idle in those fleets, parkings, right, is the largest, is in Singapore Bay, is floating basically. And currently, with the current trends that are in place, it's at an all-time low. So there's simply no ships available, right? The total idle fleet today is stated at about 170,000 containers. This represents less than 1% of the global fleet, basically. So 99% of the global fleet, containerized fleet, is available. So here you look at capacity management, and everybody says, why do people not buy new ships? Yes, this is quite correct. And if you look at the order books of new build ships, this has finally gone up after, over the past 10 years, the order book size versus the existing fleet has decreased from 30% in 2010 to 8% in 2020, the lowest point in recent history. The all-time low order book, the current low interest rates, and the improved carrier financial results have recently led to a strong new wave in building of vessels. Within just the last 3 quarters, the global container ship pipeline jumped from 8% to more than 20% of the existing fleet. So you can see the carriers are investing into container ships. The problem is the lead time is somewhere between 2 to 5 years to build a new container ship. So it will take time until this capacity ultimately comes into the market. We expect the first new builds to come into the market around 2023. So there you might see a relief, but for the coming year, we still predict that the market will stay very much the same, right? Again, looking at, because everybody's dealing with increased costs, so just looking and giving a little bit of an insight on chartering. So vessels can be chartered, right? And the chartering price usually is a revealing factor as to how the various trades are and what the market basically situation is like. And if you look here, this is charter rates from 2013 to 2021. And so a vessel that can today carry 8,500 TEUs, so 8,500 flexi tanks basically, costs $140,000 a day at this point. And we believe this is still going up. So the prices are increasing because there's simply not enough capacity there, right? And it's in unprecedented times to have such costs. This has never been the case that we see costs skyrocketing to such levels. So here we are looking at the supply and demand. So here you can see that finally there has been new capacity coming in. So if you look at and I'm sorry, they might be a little bit too small, so apologies for this. So if you look at the 4 last bars, this is new capacity that's ultimately coming into the market, and that is coming in. And this also shows the confidence in the shipping lines that they believe that the global trade will continue to be very, very strong over the coming years. And they are starting to invest a lot of their margins and a lot of their profits that they're doing into new builds and into new capacity to assist with basically the supply of space for shipments. This is an interesting chart that I think is very relevant for this particular industry. One, you can see this is the cost of building a container, which hit an again unprecedented number of $3,800. Yeah, usually you could buy a 20-foot container for around $2,000. Today you're looking at more around $4,000, right? The situation is improving. There's a significant amount of containers being built, but they can't be built fast enough. And of course, a lot of these containers are built in Asia, and they first have to get from Asia to a place where they are needed, right? So if you look at places like South Africa, who have or Chile in particular, who have a very strong consumer market, right? And this is the Apple effect, yeah? If you look at it, a TV used to be huge, right? And you put it in, and you had a couple of TVs. Now TV is extremely small, right? And you can put many into containers. So in a consumer market, usually there's a strong investment into 40-foot containers, and this is what's happening today. So carriers are investing in 40-foot equipment, but they are not necessarily investing into 20-foot equipment, which is needed to carry flexi tanks. yeah, and we are seeing, and probably anyone who has dealt with flexi tanks, we're seeing a lot of bulging flexi tanks and a lot of problems with regards to flexi tanks that are not necessarily related to the tank, because I think the flexi tank itself has developed over the past 10 years significantly. So you don't see a lot of ruptures, you don't see a lot of leakers. What you see mainly now is that container failures, basically, which is not a failure of the tank, it's a failure of the container. Why do you see this? For a very simple reason, that the containers are getting older, the containers are getting weaker, and there is now a problem in regards to this. So there are new builds coming in, but not enough. And I think over the next foreseeable future, the biggest issue will be to have the equipment and to have the container there, not necessarily to have the space on the vessel, but to have the container that can carry the flexi tank and that is suitable to carry the flexi tank. So here, this is a little bit an overview of what happened in the global trade. Again, the wine industry has been relatively sheltered from these developments. This is mainly driven by the Asian trade, so Asia to Europe, Asia to USA, and we're looking at some indexes, and you can see essentially this is the World Container Index. And today, the average freight rate is above $10,000, which has never been the case. And I think the wine industry has not really experienced this. I think we're seeing slowly some of the rates on the North American trades to go there. But historically, shipping, as I said before, was extremely cheap and not an issue. And here you see the various steps. There was obviously a surge in volumes. Then you had the Suez Canal incident where the ship got stuck and all of a sudden a lot of containers got stuck. And then you have had a COVID outbreak in the Yantai terminal. They shut down the terminal. To put this into perspective, the Yantai terminal handles approximately 40,000 containers a day. Just to so it's a massive impact on the global industry, right? This is that's why this has been such a big event, is because this is one of the largest container terminals in terms of exports. Again, here this is similar to what I said before. The average rate today is at 10,330. We have seen some slight relief on some of the freight rates over the past month, but it has not significantly changed, and we are still seeing in several markets that our rates are going up. And I will talk a little bit about in my last slide more, and maybe we do this more interactive, right? So then, because I guess you have questions, so this is very high level really what's happening. And the outlook, right? There's no easy solution because goods will be shipped. The way our world today moves is essentially with imported goods, and we buy consumer goods, we buy goods that are imported from all over the world. And when does it end? We don't know. I look at my crystal ball every morning, basically, but it doesn't give me the answer. So we don't know yet right now. We are believing that this situation will still continue, at least for the next year. There will be some relief in 2023, but we believe that the world of shipping will not significantly change in the foreseeable future. And it's not only really, if you look at shipping on sea, or sea freight or sea containers. It's also a trucking situation in the US, in the UK. It's not an attractive job anymore to drive a truck, right? And it's not very well paid. In a way, this is resulting now in all these problems. We believe our forecast is, right, or not forecast, not really true, but we believe that the UK, the carriers will soon omit the UK because the infrastructure in the UK is so bad and there's so many containers sitting in the port that they can't evacuate them, and so carriers might drop them elsewhere in Europe, but the European ports are also saturated, right? So if you look at Europe in particular, US has always been a problem. West Coast is a massive issue, of course, in LA, Long Beach, but all the US ports are now really in the same situation. So what further impacts are really to be considered, right? So from our perspective, if you look at the rates and the fuel, so we have 6 pockets, right? So rates, fuel, volume forecasting, origin ports and inland moves, transit times, carrier service level, and surcharges and free times. So these are really the 6 pockets if you plan on your shipment and if you're planning your budget for next year. So we believe that you need to increase lead times because this will not change basically. And we also see that carriers are now much more stringent on free time allowances, et cetera, where it used to be, oh, you can have a couple of extra days. Today, no, the carriers are actually cutting down free times. They want to move their container. They know that ultimately the asset is really the equipment. And if the equipment is tied up, then they will not move it. We've seen for the first time, I'm 30 plus years in the industry. We've seen really for the first time that carriers evacuated empty containers and they didn't want containers to be full and to be loaded because they wanted to bring them back to Asia as quick as possible because that's where the money sits, and they were not interested to carry cheap commodities and non-revenue paying commodities. So really, if you look at this, the rates we believe will stay high, and we have not seen the peak of it for the foreseeable future. Volume forecasting is critical, right? And this is something that we talk to our customers about. We can't ship in 1 week 10 containers, and in the next week they're nothing, and then 10 containers again, and these surges. So ideally, it's consistent volume. Then we can plan for this. We can plan the allocation with the carriers. Origin ports and carrier inland moves, right? Equipment turn time. So some of the carriers, this is not very relevant for actually the flexi tank business because a lot of carriers will not move flexi tanks. They have to be moved essentially by third parties. The carriers will not move them, but this is one area where we are seeing improvements. That if the carrier does the on carriage and can load the container back full and get it in full, we are seeing some improvements, right? Transit times, as you've seen, I mean, we are at an all-time low in terms of the overall schedule reliability. So these will also stay at quite a long time, basically. And then we have the carrier service levels, but this is not something. This is something we deal with in terms of documentation, etc. So we'll see that we can do that. I think the biggest advice that we can give to mainly the importers is to have your paperwork ready as early as possible and submit it to customs as early as possible, because this can be quite costly if customs wants to take samples or if customs does not clear it and the containers sit for an extended amount of time. These rates will really go up, right? And these costs will really go up. That's it for me, basically. So in terms of, I'm very Germanic, right? Sorry, I did 25 minutes, so sorry. If I'm told 30 minutes, I don't go over 30 minutes. But if you have any questions, so I left 5 minutes for questions. So that's what I meant to say, yeah? Sorry, then I get a water.
Hello, thank you. Do you think that the cost of freight will be back to the times pre-COVID, or they're going to stay a little bit higher?
It's a good question. I believe no. I believe the freight rates will be higher. But we also have to be realistic in certain areas, right? That certain products cannot sustain such freight rates, right? And certain products are not... It's simply impossible because the margin is too low and freight can't be the dominant factor. I do believe that the freight rates will normalize themselves at one point, but to a new normal, right? It's like there's been COVID and then there's a new normal after COVID, and I think this will be the same for the freight rates. The freight rates will not go down to the levels they were pre-COVID. And in all honesty, it's also not sustainable because if you think about it, you fly from A to B and you pay, $500, $1,000, right? And you take a whole container from the southern hemisphere to Europe, and you also paid $600, $700, $800. So these rates are not sustainable, and I don't think they will come back basically. But I believe the industry has also to look at it and say, like I said before, some of the commodities can't sustain $10,000 freight rates. Right? A bulk wine container, it's quite difficult to move at that price because the wine is relatively inexpensive, right? And the freight rate can't be a dominant factor. But I think this has now been one of the major things. I mean, if you look at the U.S. market, this has always been the case. So if you look at your calculation, some of the American wineries, especially in California, they always added transportation cost, right? And they would say, I can buy a wine cheap in Spain, but I have to buy it ex works and the trucking is too long, so I buy it FOB in Chile. It's cheaper for me, basically. My landed cost is less expensive than a wine from Spain that is cheaper. And I think this will be a big factor. There will be a cost factor. And of course, this is not my business. I'm only in the transportation business, right? But I think that some areas, we will see wines that will simply be switched out to other origins. But to answer your question, no, I don't think they will go back to pre-COVID times. In terms of shipping? Like when do we think? I think 2023 we will see some relief because there's a significant amount of capacity coming in. I think depending on which trade you're in, let's say if you look again at the southern hemisphere coming to Europe, it's quite tricky. Yeah, and in California, I include this there as well because you have to still go through the Panama Canal. So you can go with bigger vessels, but not such large vessels. So you don't see any humongous like these super ships. Yeah, that we're talking 20,000 TEUs. These are not on these trades. They are smaller ships. Yeah, but I give you an example and just to throw out numbers, right? So to put this in perspective, if a container from Australia to New York brought $2,000, right? And it transshipped, let's say, in Sri Lanka, right? But a container from Sri Lanka to New York brought you $5,000. What does the carrier think, right? The carrier will say, why should I take a container all the way from Australia for lower money than actually on a direct leg from Sri Lanka into the US? And I think this is where the cost calculation is now different and where carriers are now much more looking at yield overall on the vessels than just looking at isolated incidents on certain trades. Any other questions? Are you a competitor? I don't answer your question. No,
Hello.
It's all good. Yeah.
Just kidding. Okay. Just kidding. No, but don't you think that bringing bigger or more vessels could only make the situation worse, considering the inland transportation situation?
Yes, correct. Yeah. And this is, of course, the problem. The infrastructure in the hinterland is not there, and the infrastructure in the ports is not there, right? So you have to have certain level of cranes. If you look at some of the super vessels, and it's a good question, if you look at some of the super vessels, why is this problem existing in LA, Long Beach? This problem is existing because the vessels can't go anywhere else, right? They can't go through the Panama Canal, right? They can go through the Suez Canal, but they can't go through the Panama Canal. Oakland is not a port that can take in these vessels because you have to go underneath the Golden Gate and the Bay Bridge. So the dredging in Oakland port is not deep enough. And Seattle and Portland are too small of ports, so they don't have the infrastructure either. So this is exactly the issue. We bring in bigger vessels, then the situation might get worse. Yeah, that's correct. Thank you very, very much. Thank you.